Hello, guys. It's a lovely morning. Today is the 11th day of June 2026, and this is what we were looking at yesterday. This was my analysis pre CPI. Remember, yesterday we had the CPI data coming out, and this was my analysis before CPI came out. And according to my analysis, we were looking for buys above this level here. We're looking for buys above this level here. once this kind of closed once this kind of closed bullish here, we are looking for I set my buy limit here to take the market up, but the buy limit was activated. Our buy limit was activated here. Then price was not rejected. Price kept pushing down and finally hit our stop loss here. So that was the second time since the beginning of this month that we are hitting stop loss. Okay, our stop loss is getting hit. So that was our first trade of the day. Then after that, once this candle closed bearish here with some good bearish momentum, it gave me a signal for a sell. That was a signal for a sell. You can see the momentum, the size of the candle. This high selling pressure here, bullish momentum, bearish momentum. So once I saw this, I set my sell limit here to take the sales and push the market down. So our sell was activated here. My stop loss is just here, above here. That's where this candle opened. This one, the one that broke to our level and closed below. That is where my stop loss was. I had a risk to reward ratio of 5.33. So once we were activated, the market dilly-dallied around here, not making any big moves until at 2 p.m. That's when we started having the push down. This push down here. We had this push down here up until 3 p.m. This is where the momentum started dying out. Remember, we had CPI coming in at 3:30. So once this 3:15 candle closed, I moved my stop loss to the wick. You know why? Because here, I moved this stop loss to the wick because the next candle opened here. Because at 3:30 you're expecting the CPI data to come out. So once this candle closed here, I was watching the market. Once it closed here, I moved my stop loss immediately to the wick. And once this candle opened here, I tried to push down, then hit our stop loss in profit with some good profit. We recovered this loss here. We recovered this loss here. Our risk to reward ratio was, let me see 2.2. Okay, 2.21, 2.19. So that means if my risk here, if my stop loss here, this stop loss here was $50, I got out with $100. If it was $100 here, I got out with $200. Okay, so that was the trade yesterday. The CPI data came out. Not so strong for the dollar. Not so good for the dollar. Let me see. Let's look at the actual data that came in. CPI. This is a CPI data that came in. The only thing that was changed. The only thing that was changed was the core PPI month over month. The forecast was 0.3. It came in at 0.2, which is not good for the dollar. And the core PPI year over year remained unchanged. CPI month over month remained unchanged. CPI year over year also remained unchanged. This core PPI that was lower than the forecast. That's what led to this push here. Let me show you. That's what led to this. I remember I told you if the data comes out good for the dollar, gold will be selling. If the data comes out bad for the dollar, weak for the dollar, a weak dollar, the gold strengthens, and that's why you had this push here. This was the push. This was the CPI push here. Gold strengthened and pushed up. You had this push here all the way up here. Then at 3:45, the market started getting back to normal as it was moving, and then at at 4:30, remember this is when the stock markets open. Okay, the New York stock markets open. So I knew they had to capitalize. They also wanted a piece of this move. That's why you will see at 4:30 again, there was this push up, then the market retraced and continued with the push down. Okay, so yeah, that's what we had yesterday. That was the CPI yesterday. It was not as explosive as we would have imagined. Uh, no big spikes in price. It was only a short move here. Then market continued pushing down. Remember this push down was ignited by the NFP. NFP on Friday is where the NFP pushed this market down. This was Friday. NFP on Friday pushed the market down. This was the NFP. Friday, Monday, Tuesday, then here we were Wednesday yesterday. Today is Thursday. So this big push down was on Monday and Tuesday, the market was consolidating. Then yesterday, we had a breakout here. The market broke out on Tuesday evening, then continued pushing down. Wednesday, it was a continuation of the breakout. Okay, remember I told you according to my trading experience trading gold, mostly on Mondays, very small moves. Tuesdays breakout. Wednesday continuation of the breakouts. Thursdays mostly it's consolidation, and that's what I think is happening around here. But I don't want to be a predict the market. Fridays is for fake outs mostly. Okay, I'm not trying to be able to predict the market, but that's my experience on trading gold. So real quick, let's jump into analysis for the day. So that's all for the CPI. That's how we got our win here. That's how I didn't trade after the CPI data came out. It was not strong. The data did not was not strong enough to move the market. Okay, so today we have PPI. We have the PPI data coming out today. This could also move the market. I'm not saying it will, but it could, because it has a very big impact on the USD. Let me show you what PPI means. PPI, change in price of finished goods and services sold by producers. This affects the dollar. Okay, so today you could expect some volatility at around 3:30 p.m. So watch out and trade carefully. Okay, on the breaking news, this news today nowadays, they're so confusing. One today you hear there's a piece that the talks have yielded results. The next day, Trump is bombing Iran. The other day, Iran, a bit confusing, to be honest. Like now, the latest is says that Trump spoke directly with Iran officials, and this is what they had to say. Uh, Iranians asked me to stop bombing. Trump tells Fox News. airstrikes will end soon. You see, so the war is far from over. It's still far from over. So real quick, let's jump into our analysis for the day. I'll make it as quick as I can, and we always start on the monthly. Identify our areas of support and resistance, our levels of support and resistance, basically the highs and the lows, where we expect price to react from. So now coming down here, this is what we are using as our monthly low. But given that we have an active candle that's already below the level, I think it would be safe to market came up here, pushed down, then we had this push up here. It would be safe to use this as a low. This is our new low. This is our new support on the monthly. This is because the market came all the way up here. It could not hold here, so it moved. It pushed down. Price could not hold here, pushed down. Then we had this push up here. So this is the next low. This is the next low that you expect to see some reaction when price gets there. So on the weekly, let's see where we are. On the weekly, you had this swing high still here, and then there's an internal structure. There's an internal structure here. So here, let's use the low is there. So here, there's this internal structure. That's the high, and the low is still here. Is the low here. Is our low here. And going down to the daily. On the daily, we had this break here yesterday. So the swing high is here on the daily, but internally we have these structures here, and price is gonna react from these structures here before we get to the swing highs here. So I would mark this as our high here, and our low is still here. I cannot mark this one because it's still an active candle. Still now it hasn't closed. If it had closed, this would be our low here, but it's still active, so I can't use that one. We are still going to use this as our low here. But on the daily, you can pick this as our low. We have a low here. We have a daily low here. There's this low that was created here when price was pushing up. So we can use this as our low here on the daily. That's our daily low. That's where we expect price to get support when it gets there. So on the 4 hours, we have the structure here. It was broken as price was pushing down. So this is our resistance here. This is our resistance here, and the support is still down there. It's always good to look at what you have on the left side. Look at what you have on the left. It guides you. So here we can use the body there. So that's our support. That's our 4 hour support, which is still there. Yeah, that's our 4 hour support. We jump down to the, just a minute. Don't know even why I was going there. We have a 4 hour support here already. So is our 4 hour support here. use the body, not the wicks. Use the body there, and here use the body too. Jump down to 1 hour. My strategy is pretty simple, simple but works. Don't complicate things. Don't complicate things. So here we had our 1 hour support here. 1 hour support here. We are having this resistance here. The 1 hour resistance is here. Is not a high because it is not a confirmed high, because we need a break above here for this. We need it has not broken any structure here for it to be a confirmed high. Okay, so this is our high here. This, as price was moving, the price moved all the way down here. Then we had this pullback, then the impulse here. So this is our high, this is our 1 hour high, this is our 1 hour low. Okay, so jump down to 30 minutes, see what we have on 30 minutes. On 30 minutes now, here is where we start to look for our entries on the 30 minutes. On 30 minutes, where do we have our break of structure? We have this break. This is the 30 a.m. candle. This is the 8 a.m. candle. On 30 minutes, our price came down, pushed up, and came down again, pushed up. So on 30 minutes, we have this low here. We have this low here. This is the low here, and then this is the high here. Okay, so our 30-minute support is here, our resistance is here, and the support is down here. As price was moving down, price can move down, then pushed up. Okay, so now this, I wouldn't want to go to 15 minutes, but let's see what you have on 15 minutes. On 15 minutes, we're still on the same levels, but it's looking a bit messy over here. So I'd rather stick to the 30 minutes. Remember, if you're using the 30 minutes, then you need to see a candle closure above on the 30 minutes time frame or below on the 30 minutes time frame before you can shift down to the 15 minutes. Okay, unless you don't shift down unless you have a closure on your time frame, the time frame that you're using. So for me, I'll be looking for a candle to close above here on the 30 minutes time frame before I can jump down to 15 minutes to look for an entry. So these are potential buys above, potential buys above. And then here, this is where I'll be looking to take a sell from, potential sells below. So if we get a buy, if we get a confirmation for a buy, we could take the market from here, from this level here, push it up all the way to this levels here. I want to push it all the way to there. Stop loss just below there. If we get a sell, I would take a sell from here and push it down to this level here. This is the farthest I would want to push the sell. Okay, so levels to watch out for on the buy side. There's this high here. So trade what you see, not what you think. I'll see you tomorrow for a recap of the same. I'm out of time. Yeah. So that's where I would want to take the market.